Very good afternoon, and thank you for joining us today to listen to how, as the theme of the event has put it, Malaysia plans to regain its lead. There's no forum that better understands the need for reforms and constructive change than the financial market, where most of the audience today are from. To tell the story of this journey from this perspective, we are grateful to have with us today the three regulatory pillars of the capital market: Bank Negara Malaysia, the Central Bank of Malaysia, the Securities Commission, and Bursa Malaysia, to discuss the catalysts and the risks surrounding Malaysia macroeconomic and market outlooks, as well as to provide the insights into policy decisions and initiatives. We'll have a short opening remark by each of the panelist members to be followed by a Q&A session. Just a bit of housekeeping. During the Q&A, we would really appreciate if you identify yourself and your organization of affiliation. So without further ado, we'll start off with Governor Rasheed of Bank Negara Malaysia.
Thank you, Mr. Chu. It's a great pleasure to be here today. I had the opportunity to join the Honourable Prime Minister in meeting the captains of industries this morning, and I'm delighted to hear the strong interest to invest in Malaysia. Let me just share the story of the Malaysian economy and where we are heading, both from the short-term and also the longer-term perspective. If you look at our track record over the last 60 over years, Malaysia has always been a prolific structural reformer and backed by economic diversity and also a sound policy mix. And it's something that we will continue to do. And this is our commitment to investors seeking stability and also lasting partnerships, which has enabled the foreign investors to earn effective double-digit returns in Malaysia. Let me just share some figures. The returns on FDI between 2021 and 2022 averaged about 14%, compared to the average return of about 12.5% between 2011 to 2019. Similarly, if you look at the domestic bond market, it also recorded the steady inflows from the foreign investors, amounting to about $5.5 billion to date in 2023, compared to the total 3 years inflow of only $10.5 billion between 2020 and 2022. On our growth story, I think the Honourable Prime Minister has touched just now. Let me just reiterate. Over the last decade, Malaysia's long-term real GDP growth averaged 4.4%. And this is much higher than the average for both ASEAN and also A-rated countries at 3% and also 2.9% respectively. And much of this is owed to our diversified economic structure and also solid macro policy framework. Let me just highlight two key points. First is the economic structure has evolved from agriculture-oriented economy to a service-oriented economy. And currently, the services and manufacturing sector accounts for 58% and 24% of the economy. While if you look at agriculture, mining and construction, it accounts for only 17% of the economy. That shows how we have evolved. Second, in terms of export, our largest E&E product accounts for 38% of total exports in 2022, while petroleum products and palm oil, including the palm oil-based agriculture, that contribute around 10 and 9% respectively. We are also diversified in terms of our trade partners. Despite being our second largest export market, China only accounts for 14% of Malaysia's total export. Singapore about 15%, and followed by the US and EU at 11% and 8% respectively. The ability of Malaysian exports to adapt to changes in global trends is also evident by the very quick and strong rebound that we observed during the GFC and also the recent COVID-19 crisis pandemic. And all this means that we have multiple engines of growth, and they have delivered what we expect of them. What I have just shared with you, it is not just a stroke of luck, but it is an outcome of a forward-looking and prudent growth strategy, good macroeconomic management, pro-business policies, and also innovative approach to economic development. Malaysia has also always positioned itself by going for more economically complex and lasting growth drivers. For example, since the 1980s, this entailed shifting from exports of commodities to manufacturing, as well as a steady build-up of domestic demand. And this has resulted in the steady increase of our level of economic complexity, making Malaysia the 24th most complex economy in the world. And Malaysia is also fast becoming a sub-regional interconnectivity hub for the ASEAN economy, which is poised to become the 4th largest economy in the world by 2050. And this enables Malaysia to offer significant prospects for investors that establishes in Malaysia. Notwithstanding what I have mentioned, we are also not spared from the challenging global trends and also undercurrents that we are facing now. Our growth in the second quarter, as you may have been aware, was affected by the slower external demand and the decline in commodity production. However, going into next year, growth will continue to be driven by resilient domestic expenditure that's underpinned by continued employment and wage growth. The Prime Minister mentioned in terms of our unemployment rate has come down, is coming to 3.3% within this year. That is the pre-pandemic level. Investment activity would also be supported by the continued progress of the multi-year infrastructure projects and implementation of initiatives under the recently announced national master plans, as was touched just now by the Honourable Prime Minister. And just moving on to the next stage of focus of development areas for Malaysia, and this will include a few areas. Number one is attracting high-quality investment, especially in the green economy, aerospace and petrochemicals, and we believe that would propel Malaysia as a global leader in industrial development, as well as strengthening its position in the global value chain. Second is the National Energy Transition Roadmap that has been said very much by the Prime Minister just now. This provides emerging opportunities that will certainly create investment of about $23 billion US. And this provides a wide opportunity for global investors to tap into the Malaysian economy. Third is just now was the National Industrial Master Plan. That's in terms of the $23 billion US investment. Third is the National Energy Transition Roadmap that also provides emerging opportunities that will certainly appeal to investors like you. Another point I would like to stress is that macroeconomic stability, strong and stable financial sector, and also sound policy-making institutions have always been essential factors that have been supporting our economic development journey thus far. The Central Bank's mandate reaffirms our commitment to this, which is to promote monetary and financial stability that's conducive to the sustainable growth of the Malaysian economy. Allow me to elaborate on this briefly. First, on monetary stability. Inflation has remained well anchored, averaging about 2% now for the past 10 years. Even in the aftermath of the pandemic, where we see many countries struggle with price pressures, inflation in Malaysia has been well behaved. In our current assessment, Malaysia's economy remains well balanced, with no major imbalances on the horizon. And inflation has also remained low and stable, with headline and core inflation expected to moderate to its long-term average. Let me touch a bit on ringgit. I think, again, Prime Minister touched about ringgit just now. I think despite depreciating during the first half of this year, the ringgit and several regional currencies have actually strengthened against the US dollar since 1st July this year. And recently, the ringgit appreciated against most major trade partners' currencies. Looking ahead, we expect that further clarity on the end of monetary policy tightening cycle by major central banks will also provide support to the ringgit and also the emerging market currencies in general. I want to stress that the value of ringgit is fully market determined. Our presence in the foreign exchange market is only to prevent excessive volatility and to ensure an orderly market conditions. We do not target any specific level of the ringgit. For portfolio investors in the room, our financial markets are progressive, dynamic, and supported by steady market development. And if you look at the Malaysian government bond market, it stands out as one of the largest and most developed in the region. And it remains stable and liquid with attractive rate yields to investors. Let's move on to the forex market, which follows liberal foreign exchange policy that we adopt. It is open and also accessible by investors all over the world through our large network of appointed overseas office. And our foreign exchange policy regime has undergone gradual liberalization over the years. And this is to enhance the private sector's foreign exchange risk management, as well as to deepen onshore financial markets. And greater flexibility has also been accorded to investors in hedging their exposure to the ringgit. All of this I've mentioned is also supported by a very sound banking and financial system, well-capitalized banks, and also with strong liquidity buffers and healthy earnings. And this will support their lending activity in the economy itself. Let me just touch 2 points on Islamic finance. On the Islamic finance front, Malaysia has been a comprehensive, well-developed, and vibrant financial ecosystem that is capable of intermediating different forms of capital using innovative financial instruments. Globally, Malaysia also continues to be a market leader in Sukuk and Islamic asset under management segments, evident by the cutting-edge financial structures, including the world's first exchangeable Sukuk and green Sukuk. Let me just stop there. Mr. Chu, thank you.
Yeah. Thank you, Governor Rasheed, for a quick bird's eye view of the macroeconomic condition of Malaysia currently. Now, it's my pleasure to invite the Chairman of Securities Commission, Dato Seri Awang Adek, for your comments.
Thank you, Mr. Chu. Thank you, everyone, for being here to listen to the Malaysian story. Of course, we had interesting narrative from the Prime Minister this morning. And I would like to thank Governor Rasheed also for putting up the overall macroeconomic performance and outlook. I just want to touch a few points on the capital market. And of course, Dato Umar, being from the Bursa, we sort of share many things together between the Securities Commission and Bursa. He can also elaborate on other issues as well. I just want to, from my experience in the Securities Commission, slightly more than a year, having gone through the issues and our effort to develop the market, because we have the dual mandate of developing the capital market as well as regulating to ensure we have a regulatory framework that sufficiently protects investor, especially the minority shareholders and all that. I think our capital market has been very resilient and robust, and I agree with the reason why. Especially if we track the performance in the last few years, during the COVID years in particular, the performance of our market, I don't know how many people knew, was perhaps the best in the region during the COVID years of 2021, if you take the overall index. The average daily trading value went up as high as 10 billion ringgit. A lot of retail investors coming into the market. During the COVID time, they stay home most of the time, and I suppose they get bored and they start to look into the market and participate in the market in a big way to drive the index, the volume, which was perhaps a surprise to some of us. But it underscores this point that we have great potential to attract retail investors into the market. So that's why we are taking some of the policy measures, which I will talk a little bit later, how to attract retail investors to the market, because we saw the potential and they are very capable. But of course now once they go out working and doing other things, they give less attention to the market. They're probably investing in other things as well. But we want to sort of attract their attention through some of the measures that we are going to introduce. We are taking some of those measures already in place. The other one is that, of course, I mentioned about the retail participation. In 2022, Malaysia also recorded a 5-year high fundraising, very high fundraising in 2022, just coming out from COVID, of 179 billion ringgit. In 2022 also, foreign investors were net buyers of Malaysian equities for the first time since 2013. So this is, to show the resilience of the market and the robustness coming through the COVID, during the COVID years, and last year we recorded almost like a record performance in the last 5 years. In 2023, we saw foreign investors have been net sellers, but the trend has been reversed with net inflows of 346 million US dollars in July and August this year. So from the net in a position in 2022, we saw the outflows in the few months during the year, but we saw that trend reverse in July, August, and hopefully after this meeting in New York with the Prime Minister, we see greater inflows from foreign buyers. In the bond market, foreign investors returned as net buyers in 2023 with huge inflows of $6 billion. And the other points to make is that our market, the PE in Malaysian stock market, is relatively low compared to the regional level, 14.8, compared to the average of more than 15 for other countries. And at our PE level now, we are lower than the average in the last 10 years of 16. Our PE in the last 10 years, the average 16. We are only now less than 15. Malaysia has the most complete ecosystem in Islamic finance, Governor Rasheed also mentioned, in the world. And of course, in the Sukuk market, we are the largest Sukuk market in the world. And of the total capital market of over 800 billion US dollars, 65% are Sharia compliant. So this is good for those interested in Sharia compliant, products. Certainly, we have the Sukuk, the equities, and also on the asset management side. Malaysia is also embarking on sustainability finance, as we heard this morning. It's one of the areas that we are giving focus on with the energy transition roadmap and also the implementation of ISSB standards next year. We think that Malaysia is a unique position because we are very strong in Islamic finance and also going on ESG investing. Because why? Because Islamic finance and ESG investing has a lot of commonalities, with the emphasis on social and impact and ethical investing. So that's why now we are very big on SRI Sukuk, for instance, Sustainable Responsible Investment Sukuk. Last year, 22, SRI Sukuk represent 10% of the total sukuk issued. And I'm sure this is, because this is relatively new, is going to be bigger going forward. And the other one is the Wakaf Link Investment Fund. We are pushing, it's starting, it's relatively small now, but I think there's a great potential to allow for those, especially Muslim investors that want to invest in asset, unit trust and all that, and then part of the dividend will be spent on wakaf purposes, charity purposes, and all that. So with that ecosystem, I think we will be in the position, uniquely in the position to capitalize on Islamic finance as well as sustainability, ESG investing. So I stopped there for a while before I going on to maybe next round on some of the key initiatives that we are going to undertake to strengthen some of these strengths that we have on making sort of the market even greater, even more vibrant, more sustainable going forward. Okay, thank you very much.
Thank you very much, Chairman Awang Adek. Now, can we turn our attention to Dato Umar Swift, the operator of Bursa, Malaysia?
That's a good job. Okay. Lucky last. Thanks, Kokwei. You know, when you're in a classroom and the smart kids answer all the questions for you? That's me. So we have a market that is resilient, diverse, strong liquidity. I'm talking both debt and equity. Rather than reiterating what Governor and Chairman have discussed, I think let's call... When we look at how the equity market has behaved, we've seen what we would call subdued trading, but it is increasing. If we look at the month of September, year to date, we're above where we used to. Month to date has gone up, year to date has gone up. But more importantly, I think it's what I would call a two-speed market for equities. We have an extremely deep market for equities, and you could see that through the support that we've had for new IPOs. Now, at the exchange, our fundamental role is actually to allow companies to raise capital, to do what they need to do, to expand, grow, pay taxes, all those good things. What we would call the virtuous cycle. And then the other part, of course, is having a deep market so investors can exit and enter. Now, when I look at the savings rate of Malaysians, I also look at the increase in fixed deposits in banks. My single goal is to mobilise that to my market. And from our perspective, we're extremely excited by the Madani Economic Framework, the National Energy Transition Roadmap, the new Industrial Master Plan, which the Honourable Prime Minister touched on. But why are these things so important? Because the government is stable, two-thirds majority, the Prime Minister has shared, he is looking at difficult decisions, winding back subsidies. So that's for my bond investors in the room. But for the alpha, the equity, the National Energy Transition Roadmap is a powerful tool. We're seeing significant investments. Those investments won't naturally come day one to the equity market, but they will. We will be the exit because we have the depth to take it. But more importantly, when I look at the National Energy Transition Roadmap, how is it going to be funded? That would be the question. It is not a secret we have subsidised electricity in Malaysia. It's known. It's one of the things the Prime Minister also touched on. But more importantly, we're allowed now, as a change of policy, to sell our energy to our southern neighbour who is hungry. So we can pay market rates for the equity we need, the debt we need, to build the plants we need to export that energy. And this will be underpinning a just transition. So when we look at Malaysia, 5 years, 10 years, 20 years, you'll be seeing this transition to a green economy. underpinned by investments that we invite you to make in green energy. We're seeing significant planting up. This is exciting because it will seed whole new communities of businesses. To give a little bit more granularity, of course, big announcement, Tesla's coming to Malaysia. Well, initially it is selling cars. It was picked over Indonesia, an interesting choice. But it's not beggar thy neighbour. Indonesia has a lot of nickel needed for batteries. So one would think the logic is there. Malaysia is inextricably linked to supply chain. As the Prime Minister said, 23% of semiconductors in the US come from Johor Bahru, which is a southern state. So our ambition is to use the pivot to green and the pivot to green manufacturing to seed a whole new industry. So that's enough from me as an amuse-bouche. Back to you, sir.
Thank you very much, Dato Umar. While I do have some prepared questions, but I think it will be probably more interesting that if we open to the floor immediately now for Q&A sessions. Sure. There's a microphone coming. Yes.
My first question is, there's been a cooling off of Chinese companies listing here in the U.S. And over the last, I think, couple of years, we've seen Vietnamese, even Filipino, and Singapore companies listing here in the United States. In the recent past, I had the opportunity to look at some Malaysian companies to potentially list here in the U.S., but didn't go anywhere. What is the, what's the gating issue, and what is the hurdle? Why the Malaysian companies don't want to list in the United States, considering there's a strong demand for emerging market equities? And the second question is regarding the stability of the ringgit. And as you know, recently the yuan has been sliding beyond the band, and even the Reserve Bank of India has been fighting, been intervening and buying billions of rupees to stabilize the rupee. Do you see that pressure building across where the ringgit could, not because of systemic issues with respect to Malaysia, but because of what's happening in China and elsewhere? I'll pause there. Thank you.
I'll take the equity question, perhaps, and then I'll defer to the Governor on the ringgit. That's not my bit. It's all about valuation and ease. There is no barrier. If Malaysian companies want to come to the Big Apple, they're welcome to. There was a lot of consternation when Grab did its SPAC, bearing in mind Grab started in Malaysia. It's simply valuation, to be frank. From a Malaysian perspective, Grab would be too big. Our fund managers have a slightly different view on valuation. Now, I'm not saying who was right or who was wrong, but given those funds hold my pension plan, I'm glad they didn't invest in it, to be honest. So there is no barrier as to... So I think if you like, the difficulty is we have a rather deep capital market. We have EPF is, well, ringgit's depreciated a little bit, so it was number 9 of overall pension plans globally. So they can write big checks if they need to be. So it is access to equity, access to liquidity, and valuation. There's no magic to it. Now, if it makes sense to list in Malaysia, companies will. If it makes sense to list in New York or London, they will. So fundamentally, it's valuation. We also see people talking about Hong Kong, Singapore less. So each market, it always gets back to the fundamental. If you're a proprietor of a company, you're obligated to maximise your value, medium term or long term. It's not transactional. So that's that piece. Governor, on ringgit.
Thank you. Thank you for the question. I think you are right. This is what the Prime Minister mentioned just now as well. If you look in terms of the fundamentals of the Malaysian economy, for example, in terms of inflation is coming down, unemployment is coming down as well, and growth is stable and in fact increasing, but the ringgit is not. Basically, how we see this is that in terms of this, more of global developments that's affecting the ringgit. And of course, what's happening in the region as well, for example, especially China, I think that also has some kind of effect on ringgit. So that's why in terms of, it's important to really see regard to the reliance of Malaysia on China. And there's some misconception on that as well. If you look in terms of our trade with China, we are very diversified. Although China is one of the largest trading partner, but it only accounts for 13% of the export. There are many others that we are export trading with, for example, in terms of Singapore, and within ASEAN itself, and also EU and also in the US as well. So that's why I think these are the misconceptions that must also be addressed. But I think you are right in terms of, it's more of the story of the US dollar, and also the story in terms of the tightening monetary policy in the advanced economy, and also in terms of some misperception also regard to ringgit in relation to China.
I just add a little bit on, or at least give the SC's perspective on listing. I certainly concur that companies can choose to go anywhere they like in terms of listing, either US or Hong Kong, Singapore. More often the cases of we hear companies are being lured to Singapore and Hong Kong with sometimes very attractive incentives and all that. We have no issue, I mean, if they so decide to go. But at the same time, we take the position that we want to encourage our local companies to be listed in our exchange, because that is a way of creating excitement, new vibrancy to the market. So we do a lot of work in terms of going out to nurture small companies, with potential to sort of create the pipeline for listing on our exchange. And I think they're showing signs of success. We work together, for instance, the Securities Commission work together closely with the state governments of Penang, Sarawak, Johor, and Selangor to get these companies with great potential to come and list. And if they are not big enough, they can go to the ACE market, many of which have done so. But when they grow big enough, we want to see them to go to the main market, because if they are in the ACE market, I think the interest of foreign investors probably not there. They would like to go to the bigger companies listed on the main board. So just to add that while we have no objection for companies going out, we also encourage them to go and get listed on our exchange, because this is a way of growing our market as well and attracting foreign flows into the country. Thank you.
Thank you. Yeah, next gentleman here.
Hi, I'm Amol from Morgan Stanley. First of all, thank you all for your comments. I just had a question, and perhaps all of you, I would love to get your opinion on this, is on the retail investor participation. So I remember there were some comments saying that it was certainly positive for the capital markets, but I guess the overall question is that certainly during COVID, it wasn't just exclusive to Malaysia. You look at other countries around the world, retail investor participation went up. I'm just curious to see that, like, net, you guys see it as a positive if retail participation goes up. And the reason I ask that is there are countries like China, which have a lot of retail investor participation, and been actually trying to institutionalize their equity markets further as a way of dampening volatility. So just curious to just get the overall puts and takes on retail investor participation, specifically in the equity markets. Thank you.
Yeah, I think that's my question. Yep. Institutional investors need someone to hit. That's a retail investor. Now, of course, as Chairman touched on, during COVID, FOMO, fear of missing out, I think the other acronym was TINA, there is no alternative, all of them we heard. And if you looked at it globally around the world, every exchange did exceptionally on volumes. We were no different. Now, what we see going forward is it's tapered off. We want more. We spend a lot of effort because we see retailers providing liquidity, bearing in mind their investment, long-term investment for a retailer could be a week to 2 weeks. We spend a lot of time looking at the demographics, how they behave. And so I think that's an important piece of our market. Now, I won't comment. And each market, to be fair, is unique. So we have a strong, we have long haul, we have long buy, we have medium term buy, and then we have the shorter term buy. So as you look at it, you would characterize long and medium being institutional. If you like, retail investors are attracted to volatility. We see it all the time. The Malaysian market is low beta. It is not a volatile market. So we're not promoting volatility for the benefit of retail investors, but we know that a market that has a degree of bubble and froth, or what one economist would call animal spirits, attracts retail investors. So we think about 30% of our market, if it's retail, is a healthy balance. We can understand why countries that have a great deal of retail, that there's too much speculation or maybe too hot, and they're looking to institutionalise that investment, but that's not one of our issues in a Malaysian context. So for us, the key is to grow that retail base, and as we move, and what we're seeing is, okay, in a Malaysian context, there are no dark pools. There is no zero brokerage because you can't sell order stream. Retailers are not adversely impacted. I mean, that's a value judgment, of course, to be fair. That is our value judgment, that we want everyone to be treated the same. That being said, we want to make sure ensure an orderly market and look for ways to ease that investment. Now, one of the key things that we're looking at the exchange, and you would have seen, we call them fractional lots, or because our shares aren't that expensive. So we're not talking about fractional shares. We don't need it. But we're envious of. We look around the world and we saw what Seri did in New Zealand. We think that's an excellent. So you change that. We need new investors. So rather than buying board lots, you now invest in terms of a sum. And facilitating that, because we recognise we're competing with crypto exchanges and other things, and we look around the region and we've seen retail investors go offshore. Our cousins in Thailand have seen their retail base fall because barriers to investing offshore have become less. And so we're mindful. So you have to have an attractive market, low touch point. But so from our perspective, it's information, because brokers are lowering their brokerage is falling. We haven't quite pivoted to fee for service yet. So the exchange is actually filling that gap. In an intermediated market, it's funny, but we recognise there isn't enough research for retail investors, so we now seed that market. And I think it's a change of mindset you wouldn't have seen from us as an exchange previously. So what we now do is identify what retail investors need. Institutional investors generally have the strength to get whatever they want for whatever they wish to pay. So we now try and bridge that gap so retailers do not feel that they're on the bad end of a trade. They can make fully informed decisions. So retail is important, but why is it important? Because it gives the entity someone to hit on the other side of the trade. So we look at the total capital market, short, medium, long term, and the roles each element plays, and make sure that each group of investors is delighted. And I do use the term delighted. I mean, I'm sure other exchanges talk about it, but we talk about the customer experience all the time, and which is a bit odd given we have a filter between us and the customer.
Okay, just a little bit more on that. We noticed that the young investors is still very small in Malaysia. So we are trying to encourage them. I think one way is to encourage this digital broking. We have given or issued 2 licenses recently, although we have quite a large number of stockbroking in Malaysia, but at the expense of the existing players not so happy with us for allowing 2 more players, but these are strictly digital stockbroking players. And this will go down well, I suppose, with the young investors nowadays. So that is one way to attract retail investors. We have reduced the stamp duty for share trading. Of course, as Dato Umar mentioned, enable fractional share trading, even reducing the lot size going forward. We are also, in terms of promoting vibrancy, I think this is quite major that we're going to announce very soon, to allow large companies in the ACE market to be automatically promoted to the main market. And we are talking about those with 1 billion market cap and above ringgit. There are companies with 3 billion, but in the ACE market. So we want to give them automatic promotion by giving them almost like very attractive incentives. We can, once they settle all the paperwork and all that, we can give approval in 2 weeks at the fees of like 50% discount. And because this will, I thought this will create a lot of interest. Immediately you have these companies, and this is supposed to be unicorn that we are looking for $1 billion companies above, and it's so hard for them to come by. And yet we have already like 7, 8 in the ACE categories that can go up to the main board and open investment to foreign funds. And so that is going to be big, and we are going to do that soon on this automatic promotion. Yeah. Thank you.
I think if I can just add to what has been said, much has been said already. Maybe just in terms of there's also importance to create awareness and also education, and we are also going big in terms of financial education in the country as well. And thirdly, also in terms of the platform to facilitate retail investors to invest as well. Thank you.
Okay, can we take the next questions? Yes.
Hi, Chung Wei Sha from Nuveen. So you guys mentioned green energy, renewable energy efforts within this program. And is there any way to quantify the order of magnitude that you're planning for that effort? And then the second question is, there are many emerging market countries talking about the same thing, about renewable energies. What competitive advantage does Malaysia have, given that you have just started this program, that would make investors say Malaysia is the destination for my investment?
Very good question. Geography, in a nutshell. We have a southern neighbour that has no natural resources, that is energy hungry. If you want to ship electricity from, say, Indonesia to Singapore, it'd be expensive. So there's a recognition. I mean, it's recognised that both countries together, from time to time, we're like brother and sister or brothers. We have our disagreements, but the simple fact is our economies are entwined. So that's number one. So it's geography. The other is the policy is forward-looking. We accept that energy needs to. We had a policy of not exporting renewable energy, so that has now changed. And so underpinning is that commitment of government. Now, as for the investment, it is in the roadmap. I'll pull out the figures shortly. I don't know off the top of my head. But that's an ambitious goal, but it's underpinned by that opening statement that I made, that energy is sold at market rates. If you like, the nuance will be Malaysia or Peninsular Malaysia it'll be predominantly solar, not hydro, because that will come from Sarawak. And so you have a question of what do you do when there's no more solar? Who pays for grid stability in the evening when the sun goes to sleep? So you'll either have to use storage or you'll need to spin up intermediate gas turbines. And so there's a lot of conversations, I mean, globally, not unique to Malaysia, is where does that cost sit? Now, one would hope and one would expect that if you're selling renewable energy, that's priced in the need, if you like, to offset and spin up at night, or the storage that needs to be put in place to ensure grid stability. So it's not just that. And the other piece you'll then see, and if you look at the National Energy Transition Roadmap Part 2, there's questions about peer-to-peer, building solar on roofs. I mean, interesting things that would not have been considered in previous administrations.
So you talk a lot about the power side of it. I'm more curious about the resource side. On the resource side, for example, the irradiation intensity. India is pretty hot and got a lot of sunshine, so they're able to do that. I'm kind of curious if Malaysia has the same natural resources, and has that been tested before?
Answer is yes, but I'm not a physicist, so I can't answer that question for you. I just look at it globally.
Okay, I think before the next question, well, I think the panelists have spoken quite a bit on liquidity, and particularly I think Dato Umar is unapologetically wants to convert fixed deposits in the banking system his way to the equity market. Now, if I may address the next question to the governor. Does Bank Negara consider the current liquidity condition in the financial system being loose, tight, or just adequate, particularly with reference to the recent open market operations that we now see that the CLIBOR, the 3-month interbank offer rate, versus the overnight rate is wider than the historical context? Is this indicative of any liquidity dislocation, or what is the impact onto the financing cost of the real side of the economy? Governor?
Thank you, Mr. Chu. I think number one is that if you look at the total banking sector liquidity, it remains adequate, I would say sufficient at around 130 billion ringgit. And also Malaysia has always maintained a consistent surplus in total banking sector liquidity, averaging about 138 billion between 2020 and also 2023. And the bank always continue to monitor how liquidity condition is evolving, and considering both global and domestic developments, prevailing economic as well as market conditions. And nonetheless, the focus remains on maintaining an adequate liquidity level to facilitate the efficient intermediation in supporting economic activity. So that's the main focus for us. Any further adjustments to our liquidity operations will be conducted in a gradual manner, and also in consultation with the market participants. In terms of, you mentioned about the increase in CLIBOR OPR spread. I believe that is largely coincided with the hiking cycle that we undertook since 2022. And historically, we observed that spread fluctuations are driven by market expectations of interest rates or demand for liquidity dynamics, particularly towards the year end as well. And this movement also reflects the market functioning and also its ability to reflect supply and demand dynamics in the onshore money market. In terms of the knock-on effect to lending rates, I don't think so there's much. I think we'll see about marginal effect, the lending rates. Thank you.
Okay. Thank you, Governor. Shall we take the next question on from the floor? Okay. While you are thinking, what's the next question? If I may pose to the Securities Commission Chairman, in terms of, we spoke briefly about the flows, particularly the non-resident flows. Year to date, we witnessed about 6 months of outflow on equity and the tide turn in July and August. However, from a macro perspective, there is an obvious visible divergence between fixed income flows and equity flow. If I may invite your comment on any insights in driving this divergence flow between the two asset classes, and particularly what can Malaysia do better in attracting the equity inflows?
I think that's why we are looking at creating market vibrancy and creating interest and excitement, and this move that we want to sort of automatic promotion of like 7-8 companies, with market cap of over 1 billion ringgit each, some 3 billion ringgit. I think that will create investment opportunities for foreign investors, because these are now the companies in the main market, and they are good companies tested already in the ACE market, and that probably create another interest. But I also want to make this point that some of this argument that we hear on the declining index, equity index over the years. One time Malaysia was like 15% in the MSCI index. Now less than 2%. 1.5, 1.6%. What are we going to do with it? And I think we cannot really fight this index because, in those days Malaysia was like a dominant player. Now we have to accept the reality that there are other players coming up in the region: Indonesia, Thailand, Taiwan. Vietnam. But what we can do is to create Malaysia as a very stable, mature, and resilient market. We cannot be, and also with a very strong corporate governance and regulatory framework in place. And because of our maturity, because of our establishment much earlier than other markets, we have gained the experience and the majority to do that. And I think that should be attractive to some investors who want stability, who want maturity, who wants resilience market. So I started my presentation with indicating that despite the COVID period and all that, Malaysian market remained very resilient and very robust. And there must be a reason for that. And that's because I think our market has been established long time, attained that degree of maturity that will not be easily swayed by happenings like COVID and all that. So this is very interesting, or I think to me, very special, unique advantage of Malaysia compared to other markets. And corporate governance and regulatory framework is very important. It comes with maturity and commitment and dedication, as opposed to some new markets that may still be, running into some of these problems. Thank you.
Thank you. Can I invite the next question from the floor?
It seems like there's an overemphasis on retail investors. I keep thinking that the vibrancy of the retail investors. Retail investors, the younger crowd wants to also invest in cryptocurrencies. I'm wondering what's Malaysia thinking about DeFi/cryptocurrency. I know there was some discussion at the recent G20 as well to come up with a common framework, but I'm curious to know if there's such initiative there.
Crypto, we regulate that very closely, unlike some other jurisdictions. We allow the trading of cryptocurrencies subject to our regulation. We have allowed players to do that. But we, because of our strict sort of supervision and regulation, there are people playing in the market, but the number is not so big, less than 1 million accounts, and in fact coming down recently because of this crypto winter or whatever you call it, and the volume, the value is also not very big. So we are quite comfortable to allow this thing to take place, well regulated, and we are also part of IOSCO kind of recommendations, and we see that although we started this much earlier than what eventually came out from IOSCO, much of what we do is basically in line with the IOSCO recommendations. But on DeFi, I don't think that because DeFi require much more sophistication, I don't think that our jurisdiction will be prone to that very much in terms of establishment. But our people, our players, our retail may want to get into this, established elsewhere in other jurisdictions. So we are working closely international collaboration in the context of IOSCO, for instance, to try to have greater cooperation and exchange of information, more actually to protect our own investors, as well as to ensure that there's no money laundering taking place through DeFi, network and mechanism. But I don't think they want to really come to Malaysia to apply for DeFi operations and all that. They can already do outside. But how do we protect our players so that the investors from Malaysia will be better protected, and money laundering will not be taking place. So this is something that we have to cooperate with at the international level, and the IOSCO is providing that framework now for greater cooperation and monitoring. Thank you.
Okay, I'm mindful of time. If I may, just ask for concluding remarks from the gentlemen on the panels here. In keeping with the theme of today, I'd like to ask the speakers, in your opinion, what are the advantages and the initiatives to enhance Malaysia's edge as a leading economy in Asia and as a capital market destinations, particularly of interest to the fund managers in the room today? If I may start with Governor.
Thank you, Mr. Chu. I think perhaps maybe I would like to just reaffirm 3 points. Number one is in terms of the economic landscape of Malaysia. I think we have heard in terms of from the Prime Minister himself, and I think from our conversation just now as well, that I think it is one with promise and resilience. That's number one. Secondly is in terms of the fiscal front. I think Prime Minister has also mentioned in terms of the commitment towards fiscal consolidation. I think that's very important. And I think we heard from him in terms of the Financial Responsibility Act, which will come to Parliament very soon. And second, in terms of the commitment regard to subsidy rationalisation. And third, also in terms of the commitment towards fiscal consolidation. I think that's a very important point I would like to just reiterate as well, in terms of having a medium-term target of 3.2% by 2025. And third is really in terms of we have a very progressive financial market, I would say, dynamic, and also this is supported by steady market development that's intended to deepen our onshore financial market. I'll stop there. Thank you.
Chairman?
Yeah, just to echo that, I think we are very confident with the various policy clarity that the Prime Minister was explaining, that the economy will do well, and what is going to happen to the capital market will be reflected by growth and development on the macroeconomic side. And we are certainly very confident that investors will come both on equities and on debt side because there are opportunities there, and we have to create opportunities. We have to provide incentives for new companies to come get listed, and with the economy growing and all that, investors also, domestic investors and retail investors also, I think, will be coming to the market in a bigger way with greater confidence taking place in the economy and seeing economic opportunities, growth as envisaged by all the new sort of industrial master plan, the NETA, the review of 12 master plan and all that. I think that is a good package for the country, and the capital market will be in a position or will be required to participate in a bigger way to finance some of these mega kind of ideas that are being planned for the country.
Hak Bin, you've written copious notes, I trust. Growing value, creating opportunities. Why do we invest? We invest for profit. Is the ringgit undervalued? You'd expect me to say yes, and I do. I think it is undervalued. Is my equity market undervalued? One standard deviation? Yes, it is. If you share these views, walk out and buy some Malaysian shares, because you'll have an FX pickup. And as the policies that we've discussed begin to take and change the country, my underlying market will also improve. So it's not necessarily, it's a sectoral story. So the gentleman to my right give you confidence and governance. I run an orderly market, a deep market. But we're running a market that is undervalued. Why is it undervalued? Because of profit. Now, as we look forward, we're seeing corporate actions, we're seeing mergers, we're seeing greater size. This is exciting times. We anticipate more of the same. And as that happens, there will be more opportunities for yourselves. I appreciate some of our listed corporates are not as large as they need to be, may not be on your radar. Perhaps you create a fund for mid-caps, emerging market. Have a look at ASEAN as a region, sectorially. Happy to have conversations around it and support your research. That's what we do. We think there are opportunities there. But more importantly, if you view the ringgit is undervalued, there's an opportunity. If you like Malaysia's story, we're one standard deviation cheaper than where we normally trade, you have a call to action. Come, invest, realise profits. Thank you.
Thank you very much. With that, I bring this session to a close. Again, let me thank our panelists as well as the patience and the participation of our audience. Thank you very much.